Good afternoon, everybody. How you guys doing today? Clarice Miner, CEO of Financial Bondage Broken, and I wanted to do a live stream, another pop-up financial advice for you guys today. How are you guys doing today? I will only take a moment to just give you some financial advice. I love giving out free information if it helps somebody in a financial distress. So I'm going to go right into it. I don't want to hold you guys too long. Okay, so our financial advice for today is filing bank title financial bank fi- excuse me, filing bankruptcy is a band-aid. Now, you might be wondering, what do I mean? What do you mean, Clarice, when you're talking saying bankruptcy is a band-aid? It's helped my cousin, it's helped my aunts, it's helped my friend. They said they did, once they filed bankruptcy, they were doing really well and they didn't have any more stress. But I'm here to tell you, they do have some problems. I found out a lot of lately, a lot of my clients that have been coming to me or to us to give credit repair or our credit restoration service, they have filed bankruptcy within the past year, 2 years, 10 years, even 20 years, and then they find themselves right back into a financial distress. So I'm telling you, is they in their financial distress because they did not get to the root of the problem. There is a root that needs to be taken care of in order for you to continuously be financially free. So I'm going to talk to you about what that root is. Okay. So why is filing bankruptcy such a bad word? Why is it such a bad thing to do? Well, it is because one, it does affect your credit score. Although during bankruptcy, they will eliminate all the things by, putting it into all the things that's on your credit report. They put it into the bankruptcy, and then the bankruptcy lawyer, will negotiate and make arrangements with your creditors on your behalf. So you're paying them thousands of dollars or hundreds of dollars to do this. And once everything is clear, your credit score has jumped up to a six, whatever score, 630, 650 score. And that's all great, but that is still not that good. That's in the fair range. Okay. So bankruptcy affects your credit report, and it affects your credit report in a negative way. It can stay on your report for 7 to 10 years. So if you have not, taken care of the root of the problem, which I will get to later, if you have not taken care of the root of the problem and you start finding yourself falling back into credit repair problems, you will have a hard time even up all the more because you're having it's on your credit report. So it stays on your credit report for 7 to 10 years, 7 to 10 years. So anything could happen within that 7 to 10 year range. If you have teenage children, it could prevent you from getting student loans for your kids, being able to co-sign for your children when they go off to college. It could prevent you from getting a mortgage. It can prevent you from getting credit cards, anything. And if you do get a credit card or something, or get a loan, it'll affect you because your credit score will also be higher. I'm sorry, not your credit score, but your interest rate could be higher because you have bankruptcy. And why is it higher? Is because you are now looked upon as a high risk. So you have high interest because you have high risk. You are high risk. So I'm going to tell you what you can do instead of, if you're thinking about filing bankruptcy, do not do it. Stop, hold your brakes. Don't go filing bankruptcy. Actually, what you can do is, if you're having some type of financial distress. I spoke to a gentleman today he's helping his father with some a sheriff sale. His The home is getting ready to go up in a sheriff sale, and I just gave him some ideas on how he can raise some money really, really fast. I told him to go and talk to the representative, because it's a lien on the house now, and his father's still in the house. So I told him, to go talk to the representative of the city or the state or whatever, see what they can do, what advice they can give you. I also told him that you can have yard sales. fundraisers, GoFundMe accounts. Open up a GoFundMe account. People are using GoFundMe for all kinds of crazy stuff, guys. People are using GoFundMe accounts to raise money for vacation. They're using money for college. They're using money for funeral expenses, all those things. So use GoFundMe accounts, raise money to bake sales, fish fry sales, um, cookouts, uh, dinner sales. You can do a yard sale. You can do so many things to raise money really, really fast to help pay off your debts. You can also uh, Dave Ramsey has a tremendous program called the balloon effect. What that is that you pay off the debts from smallest to largest. So if you have a credit card, you have 5 credit cards, and one of them is like $60. Pay that off really fast, okay? If the ones that are higher, you can call them and make negotiations on how you can pay this much more every month to pay that off really fast, okay? And you can continue to do that until you pay off all the credit cards and the loans as soon as possible. Another thing you want to do is, if you have collections on your credit report, collections, you can dispute those things. You don't owe collection companies because you don't have an account with them. You don't have a contract with them. You didn't sign anything on any dotted line saying that you owe them a debt. Who you owe is the creditor, the original creditors. So if that's on your credit report, you can call them up, make negotiations about and discuss with them how you can pay that debt off as well. Okay, so you can, the balloon effect, Dave Ramsey balloon effect, pay off your debts from smallest to largest and just knock them out by just paying more and making negotiations with your creditors so that you can pay off the debts quickly. Dispute collection accounts, pay off the debts to the original creditor. And number three, so that you don't fall back into this financial distress, make sure you have these these things in place. You need an emergency savings account. Emergency savings accounts will help you tremendously when life happens. The car breaks down, someone loses their job, someone passes away. It will help you tremendously so that you don't have to rob Peter to pay Paul. Robbing Peter to pay Paul, that's how it keeps us in debt. So having emergency savings. Start off with $1,000. Raise the same ideas that I gave you to raise money to pay off your debts really quick. You can do the same thing to raise money in your emergency, that $1,000 for your emergency savings. Okay. And then your emergency savings should be between the 6 to 12 months. I say 6 to 12 months. Most financial experts say 3 to 6 months. I say 6 to 12 months, because if let's say you lose your job, now you have it, then you find a job a month or 2 months later. Now you have enough money because your bills are behind, right? So you have to pay off those bills and then you have to catch up. So 6 to 12 months is a great amount to have in the emergency savings. So after you get to $1,000, you can start building your emergency savings and as things like funds, index funds, mutual funds. That way that your money will start growing faster, and you don't have to stress about how am I going to build this 6 to 12 months. 6 to 12 months of your monthly expenses that you need to live off. So your food, clothes, shelter, utility bills, things like that, things that you need to have so that you and your family can survive until things get better. Okay. Also, if you have retirement accounts, retirement is savings is very, very important, because one day you're going to retire. I don't know if maybe you're one of those Superman or Superwoman women that say that they're never going to retire ever, but eventually you're going to have to retire. And even if you don't retire, you can and you work until you're dead, you can leave that money for your family. So you can have a 401k plan, or for nonprofits, it's a 403 plan. I think that's what it's called. Uh, Retirement planning. So those are really with the companies that you're working for. They offer that with a match. You can also have a Roth IRA, traditional IRA, things like that in place. So you need to have emergency savings, 6 to 12 months emergencies, savings in a savings account, or in some type of fund. And you want to have retirement. And the last, most very, very important thing that you need to have, the most important thing that you need to have is life insurance. Life insurance is very, very, very important to have because you don't want to leave your family in distress if something happens to you, especially if you are the main income earner in your household. Okay, so you want to have emergency savings, you want to have retirement savings, you need to have life insurance. Life insurance will cover you if when you pass away, and it'll cover your expenses. So you want to have enough life insurance that will cover not just your burial expenses, but your the debts that you may be leaving behind, your medical bills, medical bills, car payments, car loans, I'm sorry, mortgage loans, things like that. You want to have enough emergent life insurance policy that is big enough that will cover all those expenses. So that is your financial pop-up financial advice for the week. I hope that it was very, very beneficial and helpful to you. And I thank you for tuning in and watching me today. Uh, Also, I want to remind you guys about our webinar that's taking place tomorrow at 2 p.m. Eastern Standard Time. You want to take advantage of that because I'm giving you all the tools, tips, and strategies on how to keep stay out of debt and keep your money. So you want to be involved in that. I will post the link to I will post a link on how you can register for the webinar tomorrow. Stay out of debt. This is Clarice E. Minor, owner and founder and CEO of Financial Bondage Broken. I pray that you have a blessed day and a blessed weekend. I hope to see you guys tomorrow for our webinar at 2 p.m. Eastern Standard Time. God bless you.